So summer is here, and with that comes two major problems that many traders face. We'll get into that in a little bit, but if you're new, there's an old saying that says, sell in May and go away. And essentially what that means is that a lot of traders aren't as interested in trading during the summer as they are during other times of the year. After all, summer is looked at as a time to spend with family, to go on vacation, really reap the rewards of the hard work that you've put in up to this point. And the result of that in the market is decreased volatility. Now, the interesting thing about decreased volatility is this. One would assume that decreased volatility only means slower markets, no movement. And yeah, we do get that. We get that summertime slowdown, and there are going to be days and weeks on end where the market just seems to do nothing. However, decreased volatility, specifically decreased liquidity in the market, also can result in bigger, faster moves, right? So it's an interesting balance where, in my experience over the last 15 years, you get these very slow periods that bore you to death, and then you get these really fast periods where everything happens in a span of a day or so before it goes back to being boring. Now, this brings us back to the two major obstacles that traders face. One is going to be overtrading, the other is going to be undertrading. They can both get you in a massive amount of trouble. Now, overtrading comes from boredom, where again, you're dealing with one of those slower periods in the market. You're going through your charts and the markets are doing nothing, and there's just, it's uninteresting. And what do traders want to do, especially newer traders? Well, traders want to trade. So although there is nothing there, you start creating stuff and making stuff and forcing stuff. You see the social media highlight reel of everyone making all this money, and you're wondering to yourself, how come I'm not seeing this? How come I'm not involved, right? I need to get some of this. And you start taking trades that you're not supposed to take. And well, we all know how that ends. It ends in disaster. It ends with you losing money. The second one is undertrading, right? Undertrading is the exact opposite. Maybe because you assume the markets are slow, you start deviating from your routine, you start sleeping in a little bit later, you start skipping your, pre or your post-market analysis, and when those opportunities do come, you miss them. And then not only did you miss those opportunities, you review it later, you saw that you missed them, you get upset that you missed them, and then you go to overtrading because you want to make up for what you missed. And it's this cycle of sadness that happens in trading. So what we've been talking about a lot in the live trading room was consistency in your routine, even when things don't seem like they're happening. And specifically, I was giving a lesson on how I deal with pattern trades. We have this cool pattern recognition software called Enigma. And I don't like using software as a crutch, I guess. I don't want to rely on it, but anything that can benefit me, anything that can help me as a trader, even help me as a businessman, right, is useful. So what I'll do is I'll load up all of my charts, everything in my portfolio. You can see it in front of you right now. And at the start of each day, I will do this. I'll go ahead and show you. I'll simply click on our pattern recognition software. Boom, 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 boom. We'll see if we actually get anything here. Boom. Boom, boom, nope, wrong one. Bop, bop, there we go. Boom, and boom. And what it'll do is it'll give me an idea of what I need to pay attention to. You can see what 1, 2, 3, 4 of the pairs have patterns or multiple patterns setting up. This gives me a big green flag that says, hey, I need to make sure I look for this. Now, again, I still want to do my own work. That's my personal style. I don't like relying on software, so I want to dig into it. I want to make sure it's a pattern for me. I still want to look at the other pairs that don't have setups because, sometimes I take patterns that this software doesn't recognize. But the point is, it gives me kind of a heads up. Instead of getting bored and being, oh, there's nothing there, boom, it shows me that there is something there. There is something I should be paying attention to. And it's a little bit of motivation to kind of get onto the screen and make sure I do what I'm supposed to do. Now, speaking of pattern trades, I don't want to make this too long of a rant. We had a good discussion during Thursday's live room session about pattern trading and subjectivity, and there was a trader in there that said patterns are too subjective. We had a whole discussion on how they're really not. I would say this, I'm speaking to the newer traders out there. During my trading journey, I tried a lot of things, right? I vultured the internet and tried almost everything that you can see on there. Anything from discretionary trading to even mechanical and systems trading, where I had these systems that literally gave me a green arrow to buy, a red arrow to sell, and I still lost money trading them. One of the reasons that I fell in love with patterns as a start was because as far as a price action trading style goes, it had the most solid black or white rules compared to everything else, right? Compared to just pure structure trading, compared to trend line trading, compared to, this other stuff I was doing, right? It was black or white. There's a little bit of discretion in there. You have to learn to identify certain legs, but after that, either it hits a certain point or not. And the reason that I flocked to it is because it was something that I can easily do. It was something that stopped me from stepping on my own feet. And here's what I would recommend. Start with something. Doesn't matter if it's patterns or anything else. Start with something. Start with one thing. Master that one thing. Learn it. Build it. Test it. Demo trade it. Start trading it live and only focus on that one thing. Once you're focused on that one thing, you're going to be able to start printing money with that one thing. Again, once you get good as a trader, aside from any psychological mistakes. As you're printing money with that one thing, now you can go about learning other things, right? And if you're familiar with how I trade now, I trade a whole bunch of different ways, but I didn't start doing all of those ways at once. I started with patterns. I started with a single pattern. Once I mastered a single pattern, once that single pattern was making me money and didn't really come with a massive time investment because it's either there or not, I started learning the next thing. Then I added that. Then after I had two things to trade that were making me money, I started learning the third thing. Now I had three things to trade that were making me money. Now I started learning the fourth thing, right? So that's how I would advise you approach your trading as a newer trader. Don't try to do everything at once. Find one thing that works for you, one thing you're good at, one thing you're comfortable with, master it. Start using it to produce income, and then while it's producing income, start building the rest of your trading business by adding different strategies, different styles, or whatnot. And again, you don't have to, but I do believe that diversification is important because different strategies are going to work and be beneficial in different markets. And for patterns specifically, when we get to these slow, kind of choppy markets, man, they kill it. They kill it. Anyway, we're going to hop into our trading video today. Going to show you some of the ideas that are on my radar for the week ahead. Real quick, if you like this software, it is available with our 14-day trial membership. Just head over to www.tier1trading.com. Find the button that says risk-free trial membership. Click it, join, download the software, start using it, and don't start trading right away. I would never advise that, but start training your eyes on how to find these things if you are someone that is interested in pattern trading. All right, let's hop into the video. We're going to start off here on the euro yen. This is going to be a follow-up on one of the ideas we looked at last week. Nothing has changed with the bigger ideas. If you guys remember, we had a potential cipher here on the daily, looking something like this, just loosely drawing this in. You can go back and watch last week's video if you missed it. We also had a Gartley pattern here on the 4-hour, looking something like this. We talked about these two different pattern formations. Well, what we've had happen recently this week is a little bit of consolidation, right? The market has really done nothing, nothing too relevant. However, we have gotten some signals that confirm our ideas, right? We're looking for those advanced pattern formations to complete, meaning that we need price action to push a little bit higher. We're starting to form, or we are forming, an ascending triangle right here, where you can see the pattern of higher lows and equal highs. And in this type of pattern formation, we would typically expect a breakout to the upside. So if we are looking for a breakout to the completion point of our Gartley pattern, which would be right here at about 137.76s. That's going to give us some room and opportunity for a breakout from 137.79s to about 137.76, about 100 pips of potential profit here. Maybe not something for the day trader, maybe not even something for the swing trader on the 4-hour, but definitely someone that trades the hourly, definitely someone that's going to be doing some day trading action. Plenty of room to take advantage of this move up. And then, of course, then we can reevaluate for the advanced pattern formations, looking for the bearish move afterwards. Next up is pound yen. This is going to be another follow-up from last week. Pound yen was very similar to euro yen. We do have a cipher, potential cipher as well on the daily chart. We have a potential advanced pattern formation on the 4-hour as well. I think this one was a bat. Let me just draw it on real quick. No, this was a Gartley as well, just a little bit of a shallower one. I'll draw those on. Similar situation. We don't have necessarily the ascending triangle forming. However, we do have some confluence for this potential Gartley pattern, right? So right now the Gartley completion point is set to be at about 163.57. It's going to be that zone all the way up to the X leg. If we zoom in here and look at kind of the most recent price movement, we're putting in a potential butterfly pattern as well. Now in the butterfly pattern, we're going to look at a move like this. This is going to be our X to A. This is going to be our A to B coming past the 786 Fibonacci retracement. That's what's going to make it a butterfly and not a Gartley. Our C to D, or excuse me, our B to C leg down here. And our D completion is going to be up here. Now the butterfly is interesting. There are many different ways to trade it, as we spoke about on Thursday's live stream. We're going to take the Fibonacci inversion here and look for this 127, and that's going to give us a butterfly completion a little bit below our Gartley completion. So if you look in this zone right here, we have both a potential bearish butterfly and a potential bearish Gartley pattern, both short opportunities. Both should be on your radar for the week to come. Euro Aussie is next. We're going to continue our pattern theme here. Again, the markets have been consolidating recently, so a lot of advanced pattern formations have been forming. I've been making a killing on them lately, although there have been a few like Aussie Canada, which have been kind of harsh, where they've come down to almost hit targets and went back up to break even. But you're going to get those, and that's better than loss. That's the brilliance of trade management, having an active trade management strategy. By the way, if you are a tier 1 premium member, so if you're watching the full recordings of the live room, let's see if I can bring this up real quick. Visit the Thursday session. Give me a second. Nope, make that the Wednesday session. Visit the Wednesday session. You can see right around the 17-minute mark, so probably right after we did the live stream ended. We had a good conversation on graceful exits, a good conversation on trade management. So if you're looking for different tactics on how you can use a graceful exit technique to kind of, save your bacon, or a trade management tactic to kind of reduce risk or lock in profit, make sure you check out this video. Nice little conversation here as well. Apparently, I'm supposed to make a podcast at the 59-minute mark too. I got to go back and do that. But anyway, so we've had a good series of advanced pattern formations. You can actually see one right here on Euro Aussie, X to A to B, B to C, C to D up here, a nice cipher. We have another potential cipher forming as well, and I'll draw this out pretty quickly here on the daily chart. The cipher pattern is going to be a little bit different than our bats and Gartleys and even butterflies, who are more like M and W shaped patterns. The cipher pattern is going to feature an initial impulse leg, as always, an initial retracement, but then that B to C leg is going to be an extension followed by one more deep retracement down here to that 786. And this is going to be a potential bullish cipher. Now, if we dig into really the second half of the cipher, you're going to see another advanced pattern formation setting up as well. This is going to be a potential bullish bat. And again, more proof that when the market is in consolidation, right, these things are going to stand out. X to A to B, B to C, and then C to D right down here for a potential bullish bat pattern. And if we go one more time frame lower to the 4 hour, I believe it is. Yep, you're going to see another one. This one looks like a Gartley. Let me just check my fibs, right? So again, black or white rules. If it hits the 618, it's a Gartley and not a bat. If it doesn't hit the 618, it is a bat and not a Gartley. This one does not hit the 618 Fibonacci retracement. So this is going to end up being an X to A to B, B to C, C to D potential bat pattern as well. And again, I show you all of these things not to confuse you, and I hope I don't overwhelm you, especially if you're a newer trader. I know the advanced pattern stuff can be kind of funky, but I do this to show you the opportunities that exist, because so many traders look at the charts and then there's nothing there, there's nothing there, there's nothing there. There is something there. You just have to know what to look for. And the more you train your eyes to know what to look for, whether it's patterns, whether it's breakouts, whether it's anything else, the more you're going to see in between the cracks. And that's what professional traders do. Professional traders can see the moves that not many others are seeing, and they know how to capitalize off of them. All right, another advanced pattern formation on the radar. Again, a lot of these this week. I think I have some other stuff for you, but just bear with me if you're not a pattern trader. Just deal with this until we get to the other stuff. We try to switch it up in this video from time to time. But we have a potential, another double pattern here on the New Zealand Swiss. There we go. We have an X to A to B, B to C, C to D Gartley pattern looking like this. And just like pound yen, we've got a butterfly, X to A to B. I'll go ahead and change the color for you. Yep. And let's make this pink, X to A to B, B to C, C to D, potential butterfly pattern here as well. So we have a potential Gartley in blue. We have a potential butterfly in pink. They're all completing around the same level. 2-for-1 special here on the New Zealand Swiss 4-hour time frame. This is your bearish completion zone. This is a selling situation once price gets into this level. Next up is the Dixie, the dollar index, and we're getting away from pattern formations. Yes, right, for some of you guys. This is actually a very interesting situation because this is a setup that I used to trade and make a killing off of when I was a day trader, but only on the range bar charts. The range bar charts are they're like tick charts where candles aren't printed off of a particular time duration, like every 5 minutes, every 10 minutes, every 15 minutes. They're printed off a range of movement. So every time the market moves in a range of, let's say, 10 pips, a new candle is printed, which means some candles could be 1 minute long, some candles can be 1 hour long. It's purely off of price movement. And I love those charts as a day trader because it gives you a different look at the market. It gives you a better look at momentum and I guess volatility in a sense in the market with the rate that those candles are printing. I've never tested it. I've never traded it on minute charts, so I don't know for sure if it works the same. My guess is it would depend on the type of chart you're trading. In general, Forex is not very directional. Therefore, any type of kind of trend continuation type of deal on the longer time frames isn't as great. But something like the dollar index or any other indice out there are a little bit more directional than many of your pairs. So who knows, it may work on this. But anyway, this is a technique called the Fibonacci inversion trade. And what we're essentially looking for is a trend continuation situation that shows us or pretends to show us that the trend is violated, but it's not really violated. And think of it very similar to like a complex pullback where, if you guys are familiar with Elliott waves, where you have your 1, your 2 right here, boom, and then your little ABCD complex pullback before the market goes on its way. This is very similar. And what I'm looking for here is this, right? This is the main area that I'm paying attention to right here, this level of structure. And what we've seen is we've seen price action again come here, consolidate it, nice high and tight flag. We break out, right? We retest that area. We break out, we retest that area. We do a new structure high, right? Not a lot of conviction in this move. You can see the length of the extension is small. And then we violate these lows, giving us the sense that the trend is over. Well, what we want to do in this situation is we want to take our Fibonacci extension tool and invert it from the swing high to the swing low. I'm going to go ahead and move these lines a little bit so I don't miss it. There we go. Swing high to swing low and back up, so backwards. And what we're looking for is this 1618 Fibonacci extension to golden mean. Now, we also want to look for confluence with our 618 Fibonacci retracement. So if we take our Fibonacci retracement tool from our swing low here to our swing high, right? You can see we have some 3D2 confluence. If we take it from our last consolidation right here, swing low to swing high, you're going to see we have some 618 confluence in that area as well. So ignore kind of the rest of the fibs. What we're paying attention to here is really the confluence that exists right in this area. And what we would be looking for is for price to extend down to this level, perhaps shake some sellers off like we did before, and then continue on our way back up. So this is something I'll be closely watching. I'm not trading this. I don't actively trade the dollar index anyway, but again, this is something that I've used on my day trading time frames for years and years and years and years with very high success. Never looked at it on any other type of time frames or any other type of markets, but this is the always learning part of trading. So I'll be tracking it and keeping an eye on it. And hey, if it's something that proves to work on other things as well, maybe it's something that we implement again in our trading strategies. So keep an eye on it. For longs on the dollar index, of course, we can look for the RSI, swap, hidden divergence, all that fun stuff as well. But we'll wait until price action gets to that point to really add the rest of the clues to the equation. Next, we're going to take a look at the Dow. We're going to start on a daily chart, and a pretty bullish week for the Dow, right? You can see the last, 5 days? I think this entire week was bullish, if I remember correctly, even leading into the end of last week. And what I'm expecting is two things. One, I'm expecting a little bit of relief, right? Lots of movement. Profit taking is going to happen. I would expect a little bit of relief, and I would also expect a chance to reload and for this thing to continue a little bit higher. Now, where am I expecting this thing to continue higher to? Well, I'm going to look at our next relevant level of structure, and for me, that's going to be right in here. And if we just take a look at what price action has done, right? Obviously, we found previous structure resistance here in the past. 1, 2, 3 times. Before that, this was a previous level of structure support. Before that, this was once again a previous level of structure resistance. Before that, this was a previous level of structure support, right? You can see this level plenty of times in the past has been significant. So I would expect two things off this, right? I always say structure acts like a magnet. One, it pulls price towards it. Two, it pushes price away from it. So my expectation is two things. One, a move to this level, and then two, a move from that level. And that's going to offer two potential trading opportunities, right? One would be the opportunity to trade it up until that level. The second one would be able to look for a counter trend move at this level to trade it back down. And if we go down to a 4-hour chart, again, you can see here's a clear look at that level of structure. Looks like we'll have some Fibonacci love there too. I think a 1618, it looks like, if my eyes do not lie. There we go, baby. Look at that, right on it. But we just cleared previous structure highs. Again, we've had a hell of a run on the Dow, so I would expect some relief here in the market. No signs of that happening yet. My RSI got all funky and whatnot, so forgive me. It's the ATR that makes it weird on this chart. But we'll look at the RSI for clues as well. But that's what I would look for the week ahead. Again, look for maybe some relief, a little bit of a pullback into our previous level of structure. Right here, you can see this consolidation zone. There we go. This consolidation zone lining up with this previous one, and then look for an opportunity to buy it up. And then once we get to this level, looking for counter trend trading opportunities to trade it back down. Lastly, we're going to look at the Australian S&P. This is another follow-up from our live room session. I don't think this made the cut for one of the live streams, but I think we looked at it right afterwards. Anyway, you can see the notes that are on here. We're looking for a bullish breakout. We did break out to the upside. Very similar to the Dow, except there are two levels we want to pay attention to. The first level is going to be this first box right here. The second level is going to be this higher box up here. But the same expectation as the Dow exists here, where we had a pretty good run. And now I would expect some relief. I would expect some type of loss of momentum, some type of pullback into the previous level of resistance, which should now act as structure or support, and then a chance to rally up to the highs here right at this 618 Fibonacci retracement. You can see a high volume zone as well. So this week, a lot of pattern trades, but also on some of these indices, some structure and price action based trades as well. Hopefully that gives you a good mix of things to look for. Hopefully it gives you an idea of some of the different things that I look for in my personal trading. And of course, if you want to learn more, head over to www.tier1trading.com. We've got some free workshops, and we got the 14-day trial where you can sign up, you can take some lessons, you can hop in some live sessions, you can download some software, and of course you can interact with what I believe is the best trading community on the planet. All right, see you guys next week. Ooh, like, subscribe, all that fun stuff. Yeah.